How other people see it. Yes, they are actually lowering the value of money by 8% a year, which is what is meant by increasing global liquidity, but most people don't get it. So you have savings and think you're doing everything right. But all of a sudden, you still can't buy a house and you still don't buy much. You can't buy as many Tesla shares or gold as you wanted to. And you're wondering why. I have money saved. I do my best, but I can't move up the ladder. That is what the basement is for. This is a new talk with Raoul from the Julia LaRose show. In it, we learn about the current state of the economy, liquidity cycles, and how rate cuts by central banks affect Bitcoin and other assets. Powell talks about how liquidity affects the prices of assets and how Bitcoin and tech stocks can benefit from the way the financial markets are changing right now. Bitcoin is selling around $63,000 right now. It has lost 3% in value in the last 24 hours and 1% in value over the last week. Please remember to like, share, and subscribe before we go any further with these issues. Share and subscribe to this video. Let's hear more from Raoul now. I've talked a lot about the everything code and how liquidity is now the key that turns the whole economy on and off. The business cycle is now being driven by that. After 2008, when the world's debt was reset, liquidity became the most important thing. This wasn't how people thought it would happen. It was over. By not having to pay any interest for a certain number of years. So everyone renegotiated their loans, didn't have to pay interest, and renegotiated their debts for 3 to 5 years. That's every major country in the world, from China and Japan to the US, the UK, EU, and Canada. This is how the world has been going since then. Refinancing bills adds cash to the account every time. Now, using liquidity to debase currency to pay off all the debt interest is what makes assets go up, since debasement makes paper currency look like it has less value. Because of this, markets go up. It's kind of a mind trick that people don't see or understand. Then I looked at how cyclical this is over time and found that it happens again and again. And we can guess when it will happen next by using some forward-looking signs in the everything code. Also, everyone should watch that video on my YouTube account. What does Ralph think about the movie and the code for everything? It's the most important thing I've ever made, but it takes 2.5 hours to watch. So, for some reason, it seems to break down pretty much by year. It's not perfect, but 2022 was macro winter. There was both inflation and a decline in every market. Even though it wasn't officially called a recession, everything went bad. What's been going on since spring last year? Do you feel better after a while? What took place? Things that were part of long-term trends, like tech stocks and crypto, did really well, but the business cycle stayed low. So the things that look ahead, the things that are driven by cash, which is a long way ahead of the business cycle, had begun to get better. After that comes global summer. In macro terms, summer is when the economy starts to grow again. This makes markets and growth speed up even more while inflation tends to be falling or staying low. That's a great time because you can make money in a lot of different ways. Everything goes up: crude oil, gold, small caps, cryptocurrencies, tech, and more. That's where we are now. Because of this, the real impact normally grows faster in the summer, around and after the US election. In fact, that's when most markets do the best. So elections tend to happen in the first half or first part of the year when things are more likely to go well. From there, it usually stays about the same for a while. That's what happened in tech and crypto, while the rest of the market caught up. Then there is the increase that lasts from the end of summer to macro autumn 2025, which is when the biggest gains happen. That's where we are now. At that time, we were just getting started. What did happen? Crypto went on a huge run, and then it stopped moving and stayed steady. Tech had a huge tear, and then a sideways correction. Now the rest of the market is becoming caught up. The next step is the big one. Summer is over. As I already said, it doesn't always work with the end of the year. It's still summer. Also, if you think about late summer, the weather is pretty nice. That's where we are. In the middle of summer, I think, the temperature is nice, making money is simple. And this is how fast things speed up around us election years. And the sound is always what I call the banana zone, where everything goes crazy. When crypto goes up, the charts look like bananas standing on end because they go straight up. Because they all have to refinance what during the election season and the year after. $10 billion in debt. The Fed hasn't been able to fix. It has not been easy for the treasury to refinance, so it has been sending out short-term bills, which is basically a way to wait for rates to go down. You can refinance your rates once rates go down. It's like you don't want to change your mortgage when the rates are high, you want to do it when the rates are low. That's why you put your money in a money market fund, which is pretty much what the Fed did. After that, they'll do that. So that time of very high liquidity tends to base the currency. China is ringing the bell for more stimulus. The US has begun the cycle of rate cuts. That is going to drop a lot. The UK and the EU both began, and so did everyone else. So now the big game starts. We just heard Raoul talk about how important liquidity is for setting the prices of assets. Let's look into how rate cuts and liquidity boosts by central banks will affect the future of Bitcoin, tech stocks, and other assets. Raoul breaks down how this big picture situation makes this a unique chance to take risks and shows how this time in financial history is different from others. Market gains are likely, especially since more money is flowing into many areas, including crypto, which is fueling growth. Let's hear what Raoul Pal has to say as he continues to analyze, talk about how the financial world is changing and what this means for investment going forward. The money is being put into the economy by governments and central banks. In the US, we have something called Fed net cash. So, what are the three parts of that state level liquidity? In this case, the Fed's balance sheet and quantitative easing are to blame. Of course, they're still tightening, but not as much as before. The reverse repo is another type of deal. This is where banks put all of their money together. That means money is tight if it's big. They put the money into banks as soon as they start taking it out. The Treasury General account, which is like the government's bank account, is on the other side. Now, things are tight if someone has a lot of savings and isn't spending it, which is the case right now. However, as soon as they write checks, a lot of money comes into the system. In a way, that means that more money is coming into the system. In other words, if you make too much of something, its worth or purchasing power goes down. So it's not always true that you and I can borrow money more easily. There's more money around which debases currencies. This isn't the case with M2 growth and private sector credit growth, which are happening right now in the private sector. Is a part of that, but they both work together because in a euro dollar setup, you can make dollars. Being a bank lets you make them appear out of thin air. As a result, there is a huge rise in money. People don't really get it though. Yes, your mortgage rate might go down a little, but what's really happening is something more sneaky that we don't see or fully understand: debasement. It's expensive to buy things, but the money we make doesn't. As a result, the things we can buy get less valuable. A thing that can be used in the future is called an asset. If you buy gold now, you hope to be able to sell it for more money in the future. This will protect your buying power. But you can't get as much gold now as you could a month ago or 5 years ago. For some reason, your wages don't go up at the same rate as the prices of valuable goods that change because of debasement. I mean, I was young when I bought my first flat in London. I worked in banking and made a good salary. It cost me 3 times my pay when I was 24. I would look at the same kind of person, a 24-year-old who is just starting out in their job at an investment bank.